Our guest says there's opportunity in some of the tried and true sectors that have fallen out of favour, notably miners. For more on his investment ideas, we're joined by the Chief Executive Officer and Senior Portfolio Manager at AIP Asset Management, Jay Bala. Great to see you, Jay.
Great to see you as well. Thanks for having me on.
You have a small position in Aurora Cannabis, which is taking out ICC.
That's right.
But as you know, Aurora is down more than 10% this year. They've been issuing so much stock.
Right.
Are you disappointed by that?
Not in particular. I mean, keep in mind, this is a market where volatility is part of the game. I mean, if you're not in it for, it could swing 30% either way. And, if you got stop losses or whatever, I mean, you're just going to get blown out. This is, if you're in, and you're going to take the volatility hit, right? So, look, I mean, sure, it hasn't performed great so far. In the next 6 months, it could be up 50%. You just never know, right? It's just these kind of stocks are just different. And like I mentioned before, I would rather be adding to positions in ICC just because, look, there's a merger arbitrage opportunity. I think, with Constellation Brands coming in and taking a piece of Canopy, I think that's really opened up the market. Like, it's no longer a case of, marijuana stock buying another one. This is, you've got real companies who could step in and say, wait a minute, maybe we're missing the ball here. Maybe we should go ahead and bid on this incredibly expensive asset, right?
It's interesting how the booze companies seem the keenest so far, not the pharma companies,
right,
or the tobacco people.
Yeah, see, this is what I said. I mean, I think the tobacco people probably have a far better synergy to acquiring one of these. I mean, they've got the distribution, they've got the production lines, they can't do marketing, but they've got the framework to do it. So it's actually surprising one of them haven't stepped up, but also keep in mind they're much larger companies with tons of liabilities. So, I mean, I don't know how many people want to take their stock at this point either, right?
You have a smaller idea for us in cannabis, Relevium Technologies on the venture. What do they do?
So they're in the process of getting licensed. They're building out a production facility. And so, we like sort of the beaten down stocks. We like stocks that, have great management teams, number one, and secondly, have huge growth potential because, I mean, if you look at the stock, it's just got hammered. And we think, by providing them with additional funding and financing capabilities, they're going to be able to grow that. And I don't think there's going to be any more bad news that's going to impact the stock any worse. Okay. So I think we've sort of bottomed out where it is right now.
We've seen a whole bunch of copper stocks, mining stocks tanking, but even lithium and cobalt have cooled. Right. You have a lithium idea for us. Now, you reckon, I think, cannabis and lithium, at least they're growth industries.
Right.
You know that the sector is growing anyway.
Exactly. And so what we're looking at is stuff that's somewhat market agnostic. Like, at the end of the day, look, I mean, we are in a late cycle. The market could come downwards, but we want to know that the core business is still sustainable. And so even if the market were to crash, I think certain sectors are going to continue to grow. I think, the whole idea of electric vehicles, that isn't going anywhere. I don't think just because the market crashes that people are going to say, you know what, I'm going to not buy electric vehicle. And so I think the demand for lithium is there. I think the demand for cobalt is there. And again, it's the same thing. If you look at some of these sort of smaller names, they've got absolutely crushed. Like if you look at Desertline, for example.
Okay. So this is a lithium play in Namibia.
That's right, but they're production ready. So that's what's amazing about this company. I mean, it's got like a 10 million market cap or less, right? And it used to be trading at like $1.50. It's come all the way down to 10 cents. And they've got a real mine with a real team who's capable of putting this production. The only thing is that lithium prices have come down a bit and everybody's freaking out. And we're saying, look, how much worse can this stock go, right? Like if we were to give them funding and financing and back them because they're a great team, we could go out and start acquiring other companies. In which case, when the cycle comes back in, say, 12 months, 18 months, you could have a huge torque on your stock. Whereas if we bought sort of an SQM, let's say prices were a rebound.
Giant lithium player.
Yeah. I mean, you might be up, say, 10%, right? Whereas this thing, you could have a 10x on your stock, which is completely different kind of multiples, right?
And then finally, you're interested in Internet of Things.
Yeah.
And you have a position in a company called Solbright Group. Is it an IoT play?
It is. So that's one of those things, I guess, what AIP does somewhat uniquely. So, we find these sort of smaller companies. So we got involved with Solbright when it was a 10 million market cap company. And we helped them do their first acquisition, which got them to sort of 15 million in revenues. And the most recent one is we helped them merge with an IoT company. And what's interesting about them is they're not interested in the actual technology itself. They're saying, look, there's going to be winners and losers in the IoT space. I mean, and the IoT space really is your thermostat speaking to your smart fridge. And there's a new CEO that came in, and back in the 90s, he had an idea of saying, hey, listen, I'm not sure who's going to win the wireless race. So what I'm going to do is I'm going to go out and start buying the spectrums for all of this stuff, right? Because I know that the growth's going to be explosive and people are going to use my spectrum. And he ends up selling this company for billions. And so he's come back and said, you know what, I think this IoT space is the same kind of idea. And so what he's not doing is he's not trying to figure out whether Google's going to win the battle or Apple or somebody else. He's just buying spectrums, right? And if you look at the company today, we invested 18 months ago. This company, at 10 million market cap, this company's got a market cap of $200 million today.
And it trades over-the-counter Solbright, that's S-O-L, Bright, B-R-I-G-H-T, SBRT, if people want to get
Correct.
involved.
And they're looking at an uplisting. They'll probably move on to the NASDAQ.
Sure. Broadly, do you pay much attention on interest rates?
We do. I mean, that's sort of core to our core strategy. At the end of the day, I've always said this, I think inflation is what's going to trigger the next crash, right? And so far, core inflation has stayed stubbornly flat, right? I mean, it stayed in that 2% level, and it's actually quite interesting that it hasn't moved. But I think, all bets are off if core inflation takes up to 3.5. Even if you have the most dovish Federal Reserve, they can't do anything. I mean, they're mandate driven. They're going to have to start moving more aggressive in interest rates. And I think people have forgotten sort of that 1999, 2000 era where, Greenspan was coming out and saying, hey, listen, we're raising interest rates and it's not 25 basis points. It's like 75, 100 basis points at a time, right?
I know.
So I think that's going to be a sticker shock for a lot of people.
We've become spoiled over the past decades. Yeah. Thanks very much, Jay.
No problem. Thank you so much.
Jay Bala is the Chief Executive and Senior Portfolio Manager at AIP Asset Management.